Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end and I will see you on the charts. In today's video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Now, as usual, first I will be covering the technical side, then we will move to the order flow, so what the non-commercials and the biggest speculators in the market are doing. Now, starting here from the monthly time frame, what we can see is that at the moment we're testing exactly the previous support, which is now turned resistance. In fact, from here, all this move to the upside was created. After that, the market created this rejection to the downside, confirming that this previous support is now turned resistance because, as you know, once a structure level in the market gets broken, it switches from support to resistance or resistance to support, depending on whether it has been broken to the upside or to the downside. So in this case, clearly on the monthly, we are testing resistance and we could expect some short-term bearish price action for the market here to reject the level. We can also notice how we do have an impulse and correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we do that, what we can see is that the market at the moment is testing exactly the 0.32 of the Fibonacci taken on this monthly impulse, which is a strong resistance area that we could expect this market to potentially reject to the downside. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how at the moment the market is testing exactly the previous high. From here, we had this rejection to the upside. After that, we had a break below the support, retest here, and at this point this previous resistance is now once again acting as resistance here, and what we could expect is a potential rejection away from the area. Going down on the daily time frame, what we can see is that here on the daily, I did speak about gold a few times in the past. I spoke about gold after the creation of this move to the upside. From here, we wanted to see a correction. I mean, a full breakdown explaining all the reasons for which I wanted to see this correction. And in fact, that is exactly what the market gave us. Then we had the creation of this W, and I made another breakdown explaining all the reasons for which I wanted to see this rejection to the downside and completion of the W formation, which again is exactly what the market gave us. Now, by the way, I will link in description these previous analysis so you can go and check them out for more free education. Now, at the moment, what we can notice is that we are creating new structure. As the market is rejecting to the upside, this area is becoming previous daily support, which, if the market will manage to break it to the downside, would be turned resistance. And at that point, on the retest of previous support and resistance, that is where it would be great to see a rejection to the downside. So until the market will remain above this support from a daily perspective, this market can easily continue higher. However, the higher probabilities, as usual, are when all the time frames are aligning in the same direction. Now, in this case, the monthly and weekly are both indicating for a potential rejection to the downside. So if the market will continue higher, it's not really very high probability. However, if we do see a break below the support, at that point, this previous support would be turned resistance. So on the retest of this previous support and resistance, this is exactly where we would have very good probabilities from here for a potential rejection to the downside. So this is the zone that at the moment I will be watching to see if the market manages to break below it from a daily closing perspective. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, we check the data for gold. We can see how with the last reports we have seen increasing in net positions. We went from 64k all the way up to 115k net positions with 2.3k longs added with the last report and 2.8k shorts getting closed. So at the moment, everything is still very bullish. We do not see any kind of profit taking from an institutional perspective. And profit taking on this long from an institutional perspective is exactly what we need to trigger this rejection lower. But at the moment, we still don't see that. So once again, another reason to be very cautious, because from here, this market can easily continue higher. However, if the market manages to break below the support, meaning that institutions have started adding shorts or at least taking profits on their longs, at that point, we should see that also reflected in the reports. And if the market breaks on the retest, we will have very good probabilities for more bearish continuation as institutions are taking their profits. So if we do get the break on the retest, how we could be approaching this potential rejection lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. So if we do get a break on the retest, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries, at that point, we could be looking for a potential rejection lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 down to $97, plus as an option, if you join Blueberry Markets from the student dashboard, since I have a partnership with this broker, they will give you a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the timer goes to 0 and the offer expires and price goes back to normal. However, spots are limited, so if they get filled before the timer goes to 0, then the offer will end anyway. So I really suggest that you take advantage and join directly from here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.